All right, so now we are going to practice a question from the substantive procedures, and this is the question gooseberry from your Kaplan kit, and I'm using the latest Kaplan kit. The question number is 233, but anyways, if you have a different number in your kit, you can just follow the name. So the name of the question is gooseberry. And let's go to the requirement first. What is the requirement of this question? The requirement is describe substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to the Gooseberry's company's research and development expenditure. So it is for 5 marks. Now 5 marks means 5 procedures. You need to write 5 procedures. This substantive procedure thing is the most important topic of the audit and assurance exam. This is the most important topic of the audit and assurance exam. And if you see the weightage of this topic, nowadays it is being tested, for 30 to 35 marks. So it's a almost 1/3 proportion of the exam, even more than that. Sometimes the students get 40 marks from it. Like for example, a full question on the substantive procedures of 20 marks, and then a part in other questions, and then objective test case questions. So this is something very important for the exam. Now, the substantive procedures again means the audit procedures which are relevant to the testing of the financial statements. We are not talking about the test of controls. I've already explained you the difference between the audit procedures when it is test of control and when it is a substantive procedure. So if the objective is to test the system, then those audit procedures are known as the test of controls. And when the objective is to check the financial statement, the figures, the amounts within the financial statements, then the audit procedures are known as the substantive procedure. But there's no need to get yourself confused in those things, because the examiner has already described that you are supposed to write the substantive procedure. So anything you are writing should be relevant to the financial statements. Make sure that it is about, presentations, disclosures, and so many things. So basically, when you're making the substantive procedures, you are confirming the assertions. You're verifying the assertions. But the simplest technique is to stick to the financial statement and the accounting treatment. Like for example, they've asked you to make the substantive procedures on research and development. Now, we have not studied the case study yet. We'll find many things within the case study as well. But planning it before we read the case study is just bring the accounting treatment in your mind of research and development. We know that research should be expensed out. Any expenditure on the research, if it is initial planned investigation, any expenditure on the research which is categorized as research, like that should be expensed out within the statement of profit or loss. And any development expenditure which meets the criteria defined by the IS 38. And what is that? We know the criteria that there should be the probable economic benefits, intention to use or sell, resources available, and ability and technical feasibility, and expense can be measured reliably. So if the criteria is met, then the development expenditure should be capitalized. And all those elements, even of the development where the criteria was not met, should be expensed out. And from the date where you have met the criteria, from that date, you're going to capitalize. Anything which is previously expensed out cannot be capitalized as well. And once the development is complete and is ready for commercial sale or use, then it should be amortized as well. So it is only when the development is complete, and is ready for the commercial sale and use, then it should be amortized. So this is the first requirement. We'll read the question and then we will see what we are supposed to write in the answer. So, but we have made they made the points that there's going to be the research thing, which should be expensed out, and they are going to be the development thing, which should be capitalized. And so what we need to do, we need to, see the research element in the statement of profit or loss, whether they have been correctly expensed out. We need to go to the statement of financial position to see whether the correct amount is capitalized. In terms of the development, we need to see the breakdown of the expenditure so that we can confirm that the expenses are properly classified as research and development. We need to see their amortization schedule, whether they have recorded the correct amortization. We can again use that technique, which is AEIOU, comparing this year amortization with the previous year and investigate any differences. And then inquire or discuss with management whether the development projects are complete and now it should be amortized. And then we can inspect the amortization schedules, and then we can recalculate the amortization and agree that figure with the management's figure. So we've already discussed these things. We'll be writing in a while. And then we have the B part, describe substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to the matters identified regarding depreciation of the property, plant, and equipment. So this was relevant to the IS 38, but anyways, if you do not remember the standard, you just need to know the treatment. You'll not get any marks for even writing the name of the standard. And this depreciation of the property, plant, and equipment is relevant to the IS 16, but again, this is not something important for the exam. You just need to know that depreciation is an expense within the statement of profit or loss, and usually it is allocated to the cost of sales. And the depreciation is an accounting estimate, and accounting estimate should be reasonable. And you need to discuss with management the rationale regarding the depreciations, their estimates are reasonable. And then you need to see the assets physically, whether all assets present are being depreciated. You need to see the non-current asset register, whether all assets present within the asset register are being depreciated. You need to recalculate the depreciations. You can compare this year depreciation charge with the previous year. So all those things we'll be discussing in a while. So this is again for 5 marks. Now 5 marks means 5 procedures. But then we have described substantive procedures the auditor should perform to obtain sufficient and appropriate audit evidence in relation to the director's bonuses. Now, we know that generally speaking, when it comes to the director bonuses, it is again the expense of the company and the liability as well, because when they announce the bonus, it becomes the expense and a corresponding liability is recorded as well. Because once the bonus is made clear, that means it is announced, and then it is obligation of the company. So it's an expense which should be recorded within the statement of profit or loss, and then a corresponding liability within the statement of the financial position, and it should be recorded as a current liability. And then like obviously every bonus is going to be different. For example, the finance director, he may have different bonus arrangements with the company. The marketing director may have different, because their performance bonuses are contingent upon their factors, for example, based on sales, based on year-end profits, based on year-end total assets. Then you can recalculate the bonuses, and again, what you can do is you can see their contractual arrangements. For example, what the company has agreed in their contracts, and because there is a possibility that they have made the fraud and they are going to make bogus payments. So even you can confirm that as well, that within the contract their bonus is agreed, and you can also see the board minutes where the bonus has been agreed as well. And then obviously we know that the director's remunerations are supposed to be separately disclosed, and they should not be made part of the wages and salaries. So again, we need to see the disclosures as well, whether those things have been separately disclosed. Okay, now we are going to read the question again. So it is for 5 marks. So 5 procedures for research and development, 5 procedures for depreciation, and 5 procedures for the bonuses. Now, remember one thing, that there are some certain easy marks which you can always get in the substantive procedures question. And let me tell you what is the technique of getting those easy marks. Like for example, this U, which represents a recalculation, is one of the most easiest mark you can get. So for example, if it is about research and development, what you can do is recalculate the amortization. Now, based on the management's estimate, because obviously they are going to tell you what is their estimate regarding the amortization, how they are going to amortize the development expenditure. So recalculate the amortization based on the management's estimate, and then compare it or agree it with the management's figure within the statement of profit or loss. So this is one of the most easiest point that you can have in the exam. Recalculation. Recalculate the figure based on the management estimate, recalculate the figure based on the management's calculation, and then agree the figure within the profit or loss or within the financial statement. So the first procedure is going to be the recalculation. I'm starting with the easiest one. So you can remember, always remember in the exam that how you can first write the easiest, because there's no sequence required in the exam. And first of all, you should go with the analytical procedure and things. Even the technique is not required. You can write any procedure. Okay, so we have started with the easiest one. So we have written the first one, which is the recalculation. Now coming towards the second one. The second easiest procedure is reviewing the disclosures. Because with any standard and its valuable calculation, you need to disclose certain things in the notes to the financial statements. So this is the second most easiest substantive procedure that you can write in the exam and gain easy marks. So you have got one for the recalculation, but make sure that you are writing the complete procedure. Don't write recalculate the figure. You will not get any marks for it. So you need to write full. Recalculate the amortization figure based on the management estimate and agree with the management's figure within the statement of profit and loss. So this is how you're going to get the full marks for it. And even the second one. So for disclosure, you need to see, review the disclosure as per standard. There is no need to write IS 38. You will see the examiner has written the reference of the standard in the standard answers, but there is no requirement of that. You can simply write, review the disclosure as per the relevant standard to confirm whether they are correctly and completely disclosed. So this is the second most easiest procedure where you can get the PET marks, the absolute marks. So this was the second one. This was the second one. So we had the recalculation. We had the recalculation, and then we have reviewed the disclosures. Now, the rest of the procedures can be made by the accounting treatment itself. Like for example, they say the research and development. So if there's anything pertaining to the amortization, so you can inquire. So either you can write inquire from the finance director, the rationale of the amortization, the basis of the amortization, or you can discuss with the relevant person, mainly the finance director, the rationale for the amortization and the respective lives which they have mentioned within the question. So let's see what they have written, and then I'll explain you the relevant procedures. So we have discussed the easiest one, and these two will apply in the depreciation thing as well. Recalculate the depreciation based on the management estimate and agree with the figure with the statement of profit or loss. And the same thing, review the disclosures as per IS 16, and there's no need to write the standard. So these are the easiest marks. So from 5, the 2 are PET and absolute marks, and rest you can make easily if you know the technique. So you are audit manager of Cranberry and Company, and you are currently responsible for all the audit of the Gooseberry Company, a company which develops and manufactures health and beauty products and distributes these to the wholesale customers. Its draft profit before tax is 6.4 million, and the total assets are 37.2 million for the financial year ended 31st January 2008. The final audit is due to commence shortly, and the following matters have been brought to your attention. This is the introduction. We do not need to worry about that thing. Okay, so the first 5 procedures are relevant to the research and development. Gooseberry spent 1.9 million in the current year developing 9 new health and beauty products, all of which are different stages of the development. Now, the second thing I want to tell you after we have discussed the most easiest procedures is that you need to focus on the case study, and the case study will itself tell you that what procedures you are going to write in the exam. It says all of which are at different stages of the development. So this is one of the most important points, different stages of the development. So what procedure you can write with respect to this? Discuss with management the stage of completion of each of the 9 projects and confirm that only projects which meets the development criteria has been capitalized. Now, you have got the third procedure right from the case study itself. Different stages of the development. Now, you are an auditor. They say the projects are a different stage of the development. So what you can do is for each of those 9 projects, discuss with management the stage of completion and confirm that only projects which meets the criteria, development criteria, have been capitalized. So this is the third procedure. Okay, we will go for it. Once they meet the recognition criteria, Gooseberry include the cost incurred within intangible assets. Once production commences, the intangible assets are amortized on a straight line basis over 3 years. Okay, once production commences. So what you can do again, you can discuss with management the projects which have been completed and brought into commercial user sale are being amortized or not. So again, and then they have said they amortize them on a straight line basis on 3 years. So what is this 3-year thing? You need to see, ask the finance director, discuss with the finance director the rationale behind this 3-year amortization, because obviously they need to tell you why they think that the development expenditure should be amortized over 3 years. And again, for you can have another procedure as well. So you can ask them, you can see in previous years where they will have the development expenditure, on how many years they were amortizing the previous development expenditure, like in the previous years. So you can confirm their accounting estimate. Then it says the management believes that this amortization policy is a reasonable approximation of the asset's useful lives, and in this industry there's a constant demand for innovative new products. So if there's a constant demand, so you need to confirm whether this development will stay alive for 3 years, because obviously the amortization represents that for how many years the entity will be getting the benefit. Okay, so let's just write few substantive procedures. Starting from the easiest one, recalculate the amortization figure based on the management's estimate of 3 years and agree or compare the figure with that of financial statement or statement of profit or loss. The figure they have reported within the statement of profit or loss, because it should be the same figure. So recalculate the amortization figure based on the management estimate. Now, the second procedure I told you was relevant to the disclosures, and you will see this procedure in every question when you read the standard answer of the examiner. So these are the free marks. I'm telling you that for everything you can write it, for most of the things. Review the disclosures as per relevant standard. I can write IS 38 over here, but I'm not writing it for you because maybe you are not having the idea of the standard in the exam. So just don't write the incorrect one. So review the disclosure as per the relevant standard to confirm or to verify that adequate disclosures are provided. You can also write review the disclosures to verify that adequate disclosures are provided as per the relevant standard. So it's all about, you know, writing the same thing in a different way. So two procedures. Now going towards the third one, which I told you, again, discuss with management the stage of completion of each of the 9 development projects and confirm that only projects which meets the development criteria are capitalized. So this is the third one. And then we talked about this one, the straight line basis over 3 years. Again, you can also discuss with the finance director. Discuss with the finance director. Don't write FD in the exam, write full. Discuss with the finance director the rationale, or you can also call it as the basis, the rationale, a basis of the 3-year useful life to confirm the reasonableness of accounting estimates. But for example, if this thing is coming in your mind that we have written 2 procedures starting with the discuss. So examiner will not allow you to write 2 procedures starting from discuss. This is a myth. This is a misconception. These 2 procedures are different. Even you can write all procedures starting with the discussion as long as they are the different procedures. They are testing the different things. They're not giving the same meaning. Then you can even write 5 procedures starting with the discuss. So there's no requirement unless and until examiner specify that you need to write all A, E, I, O, U, which is the exceptional case. I remember that there are 2 or 3 attempts in which the examiner has mentioned that using A, E, I, O, U, the evidence gathering technique, make the procedures. If that is the case, then obviously you need to write one procedure from analytical procedure, one from the inspection, and so on. But if this is the requirement where there is no thing mentioned, just write the substantive procedures. But obviously, we are not going to write all procedures starting with the discussion. We'll write mix of that, recalculate, review, discuss, and then we can write another one. Okay, so we can write, the procedure relevant to the research. Okay, so for items classified as research, now obviously you need to have the breakdown, the schedule of the expenditure, and obviously you need to see, like for example, they have made the payments to the university student, the market research thing, or for example, the initial plan investigation. So there will be some elements relevant to the research, some element for the development. So you need to see for items classified as research that okay, these are the research elements. Recalculate and agree the figure with the statement of profit or loss. So identify that, okay, these are the research elements, recalculate them, and agree that figure within the statement of profit or loss. And you can also for those expensed items agree the relevant figures to the supporting documents such as invoices. Like obviously, for example, if there are elements relevant to the research, such as they have made the payments to any freelancers or university students for investigating some matters, then obviously they have probably invoiced them for those things. So if there are any research elements, you can do the similar for the development expenditure as well. For those capitalized as development, agree the relevant figures to the supporting invoices. So we have made 6 procedures, although the 5 were required. Similarly, you will be making the procedures for the property, plant, and equipment. Discuss with the finance director the rationale of the depreciations. Let's just first read it so we can have a proper idea what we are supposed to write. Gooseberry Company has a large portfolio of property, plant, and equipment. In March, the company carried out a full review of all its PPE and updated the useful lives, residual values, and rates for many categories of assets. We know the depreciation, useful lives, and the scrap values are an accounting estimate. And the I-16 states that it can be revised only if there is a genuine change. At each reporting day, the entity should conduct a review and they can revise it if there is a genuine change, and that should be prospectively applied. There should be no change in the previous figures. The finance director felt the changes were necessary to better reflect the use of assets. This resulted in the depreciation charge of some asset changing significantly for this year. So again, the first procedure is relevant to the discussion with the finance director, the rationale of changing the useful life, residual values, and the scrap values, and confirm the reasonableness of those accounting estimates. So for some depreciation which has changed compared with the previous years, to confirm the reasonableness of the accounting estimates. So review the non-current asset register to confirm that all the assets which are present within the asset register are being depreciated, recalculate the depreciation charge and agree the figure with that of the financial statements, physically inspect the assets to confirm all available assets are being depreciated, and then you can also see that disclosures are relevant to the IAS 16. Again, the same procedures. For bonus elements, you can again, first of all, it is an expense of the company, so make sure you see the statement of profit or loss to confirm the relevant bonus are being expensed out within the statement of profit or loss. Statement of financial position, review the statement of financial position to confirm the relevant current liabilities recorded, recalculate the bonus payments, and agree the figure with that of the financial statements. Review the board minutes to confirm the decision of the bonus, and also agree with that of the employees' contracts, and review the disclosures to confirm the director's remuneration, the bonuses are separately disclosed and are not made part of the wages and salaries. So this is how you are going to attempt the substantive procedure question. Now what you can do is attempt these three parts right now. Just write 3 procedures from each and send me the answers. I will review it whether you are writing it correctly. So in the same group where you are being added, just write 3 procedures of other than what I have written, and then I will review it whether you have written the correct audit procedures. So I'm expecting your answers in the group. See you then.